All right, welcome back for another deep dive. Today we're tackling the Aussie housing market.
Sounds exciting.
It is, especially when you look at what happened in the last few months of 2024.
Definitely a lot to unpack there.
We've got the CoreLogic Home Value Index report, hot off the press, from January 2nd, 2025. And let me tell you, there are some surprises in here. High interest rates, but we still saw growth. Some cities doing great, others not so much.
Yeah, a real mixed bag.
By the end of this, you'll know more about the Aussie housing scene than most people. Ready to dive in?
Let's do it.
Okay, first thing that jumped out at me. Australian home values dropped in December 2024.
Oh, wow.
Yeah, first decline in almost 2 years. It makes you wonder how we even got here. Because for most of the year, from February 2023 to October 2024, the market seemed unstoppable. High interest rates, cost of living going up, people couldn't borrow as much, but the market just kept chugging along.
It's almost like a delayed reaction. But what we're seeing now is affordability finally catching up with buyer demand.
Makes sense.
And on top of that, we've got more housing supply coming online. So you put those together, and it shifts the balance, explains the December dip.
So classic supply and demand, but happening during some pretty wild economic times. And to really see how big this shift was, we have to remember that December's decline actually pushed the whole quarter into negative territory. And it capped off a year where growth was all over the place. Strong start, 4.1% growth in the first half of 2024.
Right.
But then things slowed down, just 0.7% in the second half.
Yeah, and if you look even closer, 5 out of our 8 capital cities, their values actually went down MUN from July to December.
So even though the yearly figures look okay on the surface, about 4.9% increase overall, which adds up to about $38,000 on the median home value.
We can't just look at the big picture, got to dig deeper. We're really looking at 2 different markets within Australia.
Exactly. And to show that, let's look at some specific cities. 3 capitals finished the year in the red: Melbourne down 3%, Hobart down 0.6%, and ACT down 0.4%. But then you've got the winners. Perth had a killer year, up a whopping 19.1%. Adelaide not too far behind, up 13.1%, and Brisbane had a solid 11.2% climb.
It's easy to get caught up in those high numbers and think everything's perfect. But even in those cities, there are signs things are cooling down. Like Perth's growth peaked at 24.7% earlier in the year, Adelaide topped out at 14.6%, and Brisbane hit 17% before settling back.
So even the winners are starting to feel the pinch of those bigger economic forces we talked about. Now, I think it'd be good to really zoom in on the December 2024 quarter. Some interesting things happened at the top of the charts during those last few months. Adelaide actually overtook Perth, 2.1% quarterly growth for Adelaide. Perth came in at 1.9%, and Brisbane at 1.3%. What explains this little shakeup?
Back to those core dynamics, supply and demand. Adelaide's housing stock is super low, about 34% below the 5-year average. That means buyers are really battling it out.
Yeah, gotta be tough for buyers there.
Meanwhile, Perth saw supply increase a bit, gave buyers more options, and that cooled things down.
Makes you realize how different things can be from one city to the next. But here's something I found interesting, maybe even a bit counterintuitive. The most affordable homes actually saw the biggest jumps in value overall.
Interesting.
Like the lower quartile of homes across all capital cities, they went up by 9.8%. Compared to the upper quartile, those only saw a 1.5% increase. So the really expensive homes aren't the ones driving the action right now.
It makes sense if you think about the big picture. Affordability is a big issue. Lending practices are stricter, so more buyers are pushed toward those cheaper homes. More demand, prices go up.
Makes sense. Now, we've talked about the big cities, but what about outside those in regional areas? Did they follow the same trends, or were they doing their own thing?
That's a really good question, and it shows just how diverse the property market is here in Australia. Regional areas weren't totally immune to those changes we saw in the capital cities, but their story is a bit different. Overall, regionals actually ended the year strong, 6% annual growth, actually beating out the combined capital city growth of 4.5%.
So even with everything going on in the economy, the regions held their own. I'm guessing, though, that we're going to see the same kind of regional differences we saw in the cities, some doing well, some not so much.
You got it.
Yeah.
It all comes down to understanding what's happening locally. Regional WA, SA, and QLD, those were the stars. 16.1%, 12.5%, and 10.5% growth respectively. Clearly benefited from that shift in demand we've been talking about. But it wasn't all sunshine and rainbows. Regional Victoria and the Northern Territory actually went the other way, down 2.7% and 4.7%.
So maybe those affordability pressures and the idea of a different lifestyle, maybe that's pushing people toward certain regional spots while others are feeling the squeeze. But let's switch gears for a bit, move away from buying and selling and talk about rentals. What's been happening there?
The rental market is also showing signs of slowing down, kind of mirroring those bigger trends we've been talking about. National Rental Index, just a tiny 0.1% increase in December, just 0.4% for the whole quarter, and 4.8% for the year.
That sounds like a pretty big slowdown compared to the crazy sales market we saw earlier in the year.
Oh, it definitely is. To put in perspective, that 0.4% quarterly increase in December, smallest we've seen since 2018, and that 4.8% annual change, that's the lowest since March 2021.
Wow, okay, yeah, those numbers paint a clear picture. It really does seem like the rental market is cooling down.
Yeah, it is, but there's something important to remember here. Even with this slowdown, that annual rental growth, it's still more than double the average we saw in the decade before the pandemic, which was around 2%.
So it's not as hot as it was, but it's still a pretty strong rental market compared to what we're used to seeing.
Exactly. And this slowdown, it's pretty widespread across most cities, and there are a few reasons for it. Reduced overseas migration, people in the cities living in bigger households, and of course those affordability challenges, they're still a major factor.
All makes sense. Any exceptions, though? Any cities where rents are still going up?
Actually, yeah. ACT and Hobart, they both saw their rental growth bounce back in 2024. Hobart's a particularly interesting case. They went from a 3.6% rent decrease in 2023 to a 6.4% increase in 2024.
Whoa, talk about a turnaround. So even when things are cooling down, there are still pockets of strength driven by local factors. Seems like every part of the Australian housing market has its own story to tell.
It really does. And understanding those local stories, that's key for anyone who's trying to navigate the market, whether they're buying, selling, or renting.
Absolutely. We've covered a lot today, mapping out the highs and lows of the Aussie housing market in the last part of 2024, but I'm sure our listeners are wondering, what about next year? What's coming in 2025?
Ah, the million-dollar question. We don't have a crystal ball, but there are some trends and potential game changers coming up that are worth thinking about.
Okay, so let's put on our forecasting hats and explore what might be in store for the Aussie housing market in 2025. Where do we start?
Well, CoreLogic, they're one of the leading property data analysts. They're predicting a bit of a soft start to the year, basically just continuing what we saw in late 2024.
So no big fireworks to kick things off, but you mentioned earlier there are some things that could shake things up. Let's dig into those.
The big one everyone's watching, interest rates. Financial markets are saying we could see a 25 basis point cut as early as April 2025 and maybe up to 77 basis points in total cuts throughout the year.
So cheaper borrowing could heat things up again.
It's not quite that simple. Rate cuts will probably boost confidence and make it easier to borrow, but it's unlikely to suddenly send prices skyrocketing. Got to remember, even with these cuts, interest rates are still going to be higher than what we were used to before the pandemic.
So more like a gentle push than a big explosion. Got it. What else should we be watching for?
Keep an eye on macroprudential policies. These are the rules that control lending practices. There's some talk that APRA, that's the Australian Prudential Regulation Authority, might make it a little easier to get a mortgage. They could adjust the mortgage serviceability buffer down a bit, maybe from 3 percentage points to 2.5.
Now, for those who might not know, can you quickly explain what that buffer is and why it matters?
Sure. Basically, the mortgage serviceability buffer, it's like an extra cushion the banks add on to the interest rate when they're deciding if you can afford a loan. So even if the interest rate is, say, 5%, the bank pretends it's 8% when they're looking at your application. It's meant to protect borrowers if interest rates go up later on.
Makes sense. So a smaller buffer means banks could approve more loans.
Yeah, it could make it a bit easier to qualify for a mortgage, which could increase demand. But there's a trade-off. Household debt is still a concern, so APRA might try to balance things out. They can put limits on high loan-to-value ratios, which means borrowers need bigger deposits, or restrict high debt-to-income lending so people can't borrow more than a certain amount compared to their income.
It sounds like the regulators are trying to find that sweet spot supporting the market without creating too much risky debt.
Exactly. It's a delicate balance. And then there's the migration factor. Net overseas migration, it's expected to slow down even more in 2025. That'll probably ease some of the pressure on rentals and eventually affect buyer demand too.
Fewer people coming in, Less competition for housing. Makes sense. But what about the supply side? We keep hearing about housing shortages. Will that still be an issue in 2025?
Yeah, the shortage of new homes, it's expected to stick around, and that could actually help keep home values up until we see a big increase in supply. It's that classic situation where demand is higher than supply, and that pushes prices up.
So even if demand cools down, limited supply could prevent a big drop in prices.
Exactly. We've seen some signs that dwelling approvals have hit a low point, but it's still tough to build enough affordable homes while making sure developers can still make a profit. It's a tricky situation.
Sounds like 2025 is going to be a year of push and pull, with different forces pushing the market in different directions.
You nailed it. It's going to be a dynamic year, that's for sure. But even with all this uncertainty, there might be a silver lining: housing affordability.
And that would be some good news. How could affordability actually improve in all this?
Well, incomes are supposed to go up while property values aren't expected to grow as much. If those predictions are right, those affordability metrics that were at record lows in 2024, they should start to recover.
That would be a relief, especially for first-time buyers who've been priced out of the market for so long.
It could change the game for them for sure. And don't forget about the cost of living pressures. They're expected to ease up a bit. Having a little more money in their pockets, that could also help boost housing demand.
So maybe 2025 isn't all doom and gloom.
Exactly. There are some reasons to be cautiously optimistic, but as always, the best thing to do is stay informed and make decisions that fit your own situation and goals.
Okay, so we've outlined the potential trends and things that could shape the Aussie housing market in 2025. But what does this all mean for our listener? How can they make sense of all this and apply it to their own lives?
Great question. Let's break it down into some practical takeaways depending on your situation.
Yeah.
So let's say you're thinking about buying a home and you've been waiting for the right time. What should you be thinking about as we head into 2025?
It's a big decision for a lot of folks out there, and I know it can be a bit overwhelming. Prices might be cooling down, interest rates could drop, lending rules might loosen up a bit. It's tempting to think, okay, 2025, this is my year to jump in.
It's definitely looking a bit more buyer-friendly than it has been lately, but it's not a sure thing. If I were to give any advice to potential buyers out there, it'd be this: patience and research, those are your best friends. Don't feel like you got to rush into anything just because interest rates might be dropping. Take your time, do the math, make sure you're comfortable with what you can borrow.
Solid advice. It's easy to get swept up in the excitement, but making smart decisions is key. Now, let's switch sides for a minute and talk about sellers. What should they be thinking about in this changing market?
Well, if you're a seller hoping to cash in big, that window might have already closed. Remember, the market started cooling down towards the end of 2024, so those super high prices we saw, they might not be realistic anymore. That being said, if you're not in a hurry to sell, holding onto your property could still be a good long-term investment, especially if those affordability improvements we talked about actually happen and boost demand down the line.
So, sellers might need to play the waiting game, weigh their options, figure out what fits their long-term plans. Now, what about investors? What's the outlook for them in 2025?
I think the key for investors this year is to be really picky and do their homework. Don't just chase the hottest markets just because they did well in the past. Instead, focus on places with strong fundamentals, things like population growth, job creation, new infrastructure. Those are the signs of sustainable growth over the long haul.
So the message for everyone in the housing market this year, whether you're buying, selling, or investing, seems to be strategic, be informed.
Exactly. Knowledge is power, especially in a market as tricky and ever-changing as real estate.
Well said. We've covered a ton of ground today, breaking down the trends and potential changes that could shape the Aussie housing market in 2025. I bet our listeners are wondering, okay, but what do the experts think will really happen?
Well, let's look at some predictions from the folks who study this stuff. CoreLogic, for example, they're saying we might see a bit of a rebound in property values once those interest rate cuts kick in.
So maybe not a full-blown boom, but a potential upswing.
Yeah, they're not saying prices will skyrocket, but we could see a more balanced market with moderate growth. We got to keep in mind those rate cuts are expected to be gradual, and all that household debt, that's still going to be a factor.
So even if there is growth, it'll probably be held back a bit by the overall economic situation. Any other predictions worth mentioning?
Some economists are talking about a soft landing for the market. Basically, they think inflation will stay under control, interest rate cuts won't be too aggressive, and the economy won't tank. In this scenario, prices might level off, maybe even dip a little, before starting to climb again slowly and steadily.
So a bit of a pause before things pick up again. Sounds pretty reasonable.
It does, right? Of course, there are always some folks predicting a big crash, but those predictions usually assume the worst about the economy and global events.
And it's important to remember, forecasts are just that. Guesses about the future. No one knows for sure, and things can change in a heartbeat.
Totally agree. The future's never set in stone. But by understanding what's happening, the potential risks and opportunities, we can make smarter choices.
So what's the takeaway for our listeners? What's the main message they should walk away with?
I'd say 2025 is shaping up to be a year of transition for the Aussie housing market. We're moving away from those super hot conditions we've seen recently towards a more balanced, maybe even a bit quieter phase. But that doesn't mean it's all bad news.
It just means the rules of the game are changing, and we need to adjust our expectations.
Exactly. Buyers, be patient, do your research. Sellers, be realistic about what you can expect to get for your property. And investors, got to be extra careful, focus on long-term value, not quick flips.
So it sounds like being cautious is the name of the game in 2025, but there are still opportunities out there for those who are prepared and informed.
Couldn't have put it better myself.
Well, we've covered a lot of ground today, but I hope our listeners feel more confident about navigating the world of Australian real estate. We've looked at the trends, dug into the data, and even tried to peek into the future.
And remember, this is just the beginning of your own exploration. Keep learning, stay curious, and keep up with what's happening in the market.
And to help you do just that, we've included a link to that CoreLogic report we mentioned down in the show notes. Think of it as your guide to becoming a housing market expert.
Happy exploring.
And with that, we'll wrap up our deep dive for today. Thanks for joining us, and we'll see you next time for another fascinating exploration of something that matters. Until then, stay curious.